GM, welcome to Morning Markets. It is Thursday, the 9th of October. In yesterday's video, I mentioned Bitcoin is in danger. There are some risk off signals. So let's take a look at them today and how they've developed, starting with the low time frame on BTC. So we saw this sweep of the highs, as I mentioned, and that was followed up by a H4 market structure break. So this is the low on the 4-hour time frame, which led to the most recent high. We closed below it, which confirms a bearish reversal. As you guys know, this is the sweep pattern where you take the liquidity, close back inside, and the reversal is confirmed after you break the low, which led to that high. And from there, you expect downtrend continuation. Of course, in yesterday's video, I said we had an inefficient move down, so you can expect a bounce. But until this sweep level is reclaimed, you have to expect the markets to continue going down after it's confirmed this reversal. It's simple. If we reclaim 125,750, this high over here, then you can look for highly probable momentum trades from 126 towards 127, maybe even 128, possibly even 130, because the invalidation of a bearish setup is a bullish setup. So for bulls to regain momentum, they need to invalidate this local top or potential top that we have over here, because currently the top is confirmed with the market structure break on the H4. Therefore, that's the signal to invalidate that. So until then, we expect lower, and this is exactly what I said in yesterday's video. We've got the H4 market structure break. Now you're just looking to where we can see a reversal from. I said we can either reverse from the H4 market structure, the August all-time high, or even the all-time high. And I said it's not bullish until you flip that level, 125,750 as mentioned. And well, where did we reverse? Just short of the August all-time high. So that is actually a show of weakness in itself. The fact that we couldn't even retest this high over here from August. Instead, we come short of it and we sold off already. So when you look at Bitcoin here on the daily, what did we see? Well, Bitcoin, it's immediately retraced all of yesterday's gains already in the pre-New York session. And it reminds me of a similar setup here. So this was Thursday, the 25th of September. I remember doing the morning markets where it looked just like this pre-New York session. We had retraced all of the gains in the previous day. And this is a sign of weakness because your London session, your pre-New York session has lower volumes. There's less buying and selling. There's less players around. So the fact that we've retraced all of the New York bullishness before the New York session shows that there is weak demand. And as you saw on the 25th, it led to a big down move, which did find support, form that higher low and actually lead to a bottom. So that is the caveat to this. Yes, we can see a down move today, but potentially it finds that local bottom. However, as I said, you're seeing the low time frames. They play into the higher time frames where we have that 4-hour market structure break. We were unable to reclaim Tuesday's red candle, and that was what we needed to do yesterday. That was the ultimate invalidation. When you have a big red day, you want to immediately retrace it the next day to show that it was just a shakeout. So as far, this isn't a shakeout, and we have confirmed a reversal here on the low time frame. So that's what I'll be looking at in terms of BTC. So how will I actually be trading this? Well, Bitcoin formed a range over here. So on this leg, Bitcoin made a high, but then it retraced to the 0.75. So a 75% retracement. Now that denotes a potential range. As you guys know, strong uptrends, if you take out your fib tool, they only revert back to the 0.25 if it's super strong, or maybe the 0.5, or people like the 618 as well, I know, the golden pocket zone. They are all valid areas for price to dip to in a trend for it to continue higher. That leads to your next impulse up and you go again. But as soon as you start seeing an impulse leg get retraced 75% or more, that's what then leads to ranging conditions. Price finds resistance at the highs and support at the lows, and depending on which way it breaks, that dictates whether you're going to continue going up or actually have a trend shift. So that's what happened. We got exactly this, where you retrace 75% of the impulse leg. So that's what set up a range for me. Now, this is all explained in my trading lessons. If you guys don't have access to the lessons, you can go in my description, drop me a message on Telegram. I'll be happy to help you. I know I've chatted to a bunch of you on there, giving you guys mentorship, answering your questions. Happy to do that. Want to see you guys succeed. I've also got a bunch of exchange links in the description of where I trade if you guys want to get cheaper fees and reduce your costs. But more on that. So when it comes to range trading, the trades I've been taking this week have been exactly the systems that I gave to you guys. So what is this? After the range was confirmed, saw this false breakout, which gives you a highly probable range. If we remove this for a second, you can see there was a sweep, false breakout, price closed within this premium zone. That opened up a short just to the discount zone. So 3.4R winner, very quick trade. And then you saw a similar setup. So on the downside, we got a sweep of the range low liquidity. So again, this system is given to you guys within my trading lessons, within the range trading lessons, fully broken down with entry, stop loss, take profit rules. You saw the sweep on the long side where get long, this one's a loser, so sure, you can't win them all, but you immediately get back in on this sweep over here, where we then take the liquidity, and that offered a nice trade back up to the mid-range of this overall Fibonacci range that we've got over here. So two decent setups. Now, what are we looking at going from here? So if we get this tool back on, when you're range trading, you're looking to trade around the extreme. So in the middle, you are literally at the mean, you're at the average. That's why it's called mean reversion trading. So price can equally go up or down. You don't want to diddle in the middle. Instead, you want to take shorts around the premium zone all the way to the minus 0.2 deviation zone. That's going to offer your extremes within the range. So that's where you want to do business. And in the discount zone, so 0.75 to the 1.2, that's going to be your high risk to reward areas for longs. Now, the caveat to that is we are, of course, in a bearish reversal setup. So that's why the shorts, as you saw, played out better than the longs. So from here, what would I be looking for? Well, you have this level over here where potentially could we see a sweep? This is where I'd have an alert set today. So on Bitcoin, sweep, look for a potential reversal. That's what I'd be seeing. So if we can come down like this and close back inside, ideally back above the 1, then I'd simply just be looking for a little scalp, trading the momentum between here to here. And potentially, if I see confluences with the order flow data, even from the sweep from just here to here. So I wouldn't be looking to trade back up to the mid-range or the premium zone. Reason for that is, as described before, we are in a bearish reversal until we reclaim that sweep level. Now, people are going to be getting super bearish, seeing price go down pre-New York session. So that's why you still can get some good scalps in there, especially if we see a sweep. That's going to be a nice setup. You could potentially even get a higher low form here if we can close above the 0.75 and the lows in for today, then sure, this is just another reversal setup where you get long once you close above that 0.75. And that, of course, is going to be your failure to return setup where you get that higher low. That is also another way I would look to trade this. Again, getting long over here, stop loss can be managed at lows or at some interim structure. And really, I'd just be playing it towards that liquidity target there. So, not interested in shorts here. Shorts were best on the sweep over here. That was your clearest setup, highest risk to reward. Now we're at the lows. We're not in a good place to look for shorts. That doesn't mean we can't break down. In fact, as you guys know, my bias is for downtrend continuation analysis wise. This is just how I'd trade it system wise. Therefore, if we do start closing below the deviation level, that 1.2, so 120K, then I'd expect this to actually just have another leg down to wherever it's going to find support, and that would invalidate the range. So you no longer trade the range once you see closes outside these red zones on the fib. So that's how I'd play it. Now 120K should be support, which is why I like that setup for today, as everyone's going to be losing their minds. You're going to see flushes across the market. You do have this support resistance, which hasn't been confirmed yet. That's why I got a question mark there, confirmation. So 119.9, aka 120K, is the value area high of this distribution volume profile. It is also where the daily 12 and 21 bands now are. So remember, a few days ago, I said, look how far these bands are. It's all about time frames, but they will catch up. And eventually, the swing traders on the daily will get their chance. So looking at 119.9K to hold, that likely confluences with this sweep setup over here. And if that doesn't hold, then I'll be looking at the POC. So that is at 118K for a deeper dip. And that would fill in some of these gaps over here and back test this high from the 18th of September. Also, as I said, the POC of this volume profile here. So that's what I'll be looking at on those high time frames for where a dip could go to. Now, of course, when we look at Bitcoin dominance, what are we seeing? This is really what tells you the story. So as I said, I couldn't see Bitcoin dominance breaking up with Bitcoin moving up. It's just not happening. Every time Bitcoin tries to break out, everyone wants to get bulls long on altcoins. So it stops Bitcoin from having the focus, the capital and attention, which it needs to mark up. So the other way you see this chart go up, as I said, is through Bitcoin dumping. If Bitcoin dumps 3% and altcoins dump 5%, 6%, Bitcoin dominance rises. So that's what you're kind of seeing here, this setup where we did form a nice bottom. We have now got above the September high. You're expecting continuation at least to these 12 and 21 bands. Maybe we find resistance there, or potentially we find resistance at this order block over here, which can come at the expense of the markets going down. We tried to go up while Bitcoin was going up. We failed. Everyone got long on altcoins. If you zoom to the daily, that was this candle over here. So 6th of October, Bitcoin tried to break out. Bitcoin dominance fell. And 6th of October over here, as you can see, this is when we tried to do the all-time high breakout. Everyone got bulls long on alts instead of Bitcoin, taking their eye off the ball. So it failed the breakout. And now you're seeing Bitcoin dominance rise instead with Bitcoin dumping. So classic, really. And I'd expect this to keep rising, which could lead to, as I said, further downside, and you get some of those targets being hit around that 120K. But it was very simple for Bitcoin. You had all the signals that I mentioned yesterday, the risk-off signals. You had this volume divergence on the Coinbase chart that I've been mentioning for weeks now. Volume going lower on every single push higher. Effort versus result, guys. If price is going higher and effort is decreasing, so there are less buyers, this literally means there are less buyers, that's going to lead to price potentially having a reversal. And that, of course, gets confirmed with the H4 market structure break. Price is king, of course. So that's what's played out. As Bitcoin's price goes higher, the market caps goes higher, so you need more volume to push it further along, especially when you've not built a base and you've been pretty up only, because otherwise sellers show up. And as Bitcoin rises with less and less buyers, sellers dominate more and more and more, and that leads to price having to go down to find a willing buyer. So now we're just looking for that willing buyer wherever it's going to show up. And we can do some further analysis on Bitcoin. So looking at this chart over here, which I shared with you guys yesterday, the green box is where spot demand was heavily present in the rally. This was when spot demand really dominated. So you can see by the spot CVD, the green line here, this is the market orders, meaning spot was rising hard, whereas the perp market orders were flat. So spot led this portion of the rally between 108 to 112.3K. That is your rock solid demand zone, because that's where we know smart money, your bigger players, your stronger hands, which buy on spot, they don't need to buy on leverage. That's where they were willing to accumulate. Now this orange box, this is more so where both spot and perps led the rally over here. As you can see, both the green and red line were rising in tandem. That was in this zone. So everything really from here, you had perps leading initially, but then spot came and bid with it. And that really lasted up to here when spot started selling off. So that was up to this price level here. That's the orange box between that 112.3 to 121K. So this is an area where there is some smart money accumulation. There is also leverage coming. So you're just looking for your dip levels on your Bitcoin chart to see where can this go to. And that's when you pull out your daily chart, you look at your daily bands, you look at your daily support zones that I've been mentioning. And that is as follows. As I mentioned, it's 119.9K, that value very high, which we haven't retested yet. So we haven't confirmed it as support. We need to see the reaction there to see if we want to bid that. If not, lose that, then you got 118K POC. And of course, lose that, then you've got the interim support between 114.8 and 116.5, which we could head back to. And that can all form a higher low and still be bullish. It's funny because you're going to see traders lose their mind, as they always do every time we form a higher low. So conditions are setting up well for it if we do have a deeper flush. But otherwise, looking at whatever level we are going to form that at the moment, it's fine. As long as we consolidate between 119.9K to 125K, then that sets up the orange path from Trade of the Week that I've been sharing with you guys. So that sets up this path over here, something like that. But if you lose 119.9, that's when you then look to your higher low scenario. And again, you're looking for how does price get there? Is it in a sharp manner? Is it in a slow manner? You want to see it in a slow manner because you don't want to see big volatility like this. But make sure you check out yesterday's video for more on that. I did a super high time frame update, went through all the risk of signals that we're seeing play out right now. So today, going to keep it more lower time frame, but just looking for that higher low, as I mentioned here, anywhere in that orange zone. And of course, your green zone is your rock solid spot demand. But this red zone is where we saw perpetual futures lead. So green CVD was down, but you can see perpetual futures actually sideways and up for a big period of this price action. So we know this red box between 121 and 126K is futures led, it's leverage led, which is okay if the market's going up. But as soon as you start breaking structure, that's when the longs get in danger. And as mentioned, you've got stop losses here. So you've got a sweep level here, which I mentioned as a potential trade setup for today. You've got some lower sweep levels too, around 119.9. And if you're going to go for some of these levels, then that's when you're probably not looking at a sweep and you're looking at a dump to an actual support zone. So I'll be checking any of these levels, as I said, for a sweep. That's going to take out your leverage, depending which level it goes to. Of course, ideally you want to see just a quick sweep of 120K and up, since there's some high time frame support there. But if we do need to go deeper, then I'd be watching these liquidity levels as places where the longs in this box have put their stop losses at. If you buy where other people have their stop losses, you tend to have better probabilities. Doesn't work 100%, but it's better than not buying where the stop losses are, and instead buying at the highs here and getting flushed out every single time you buy into them. So that's what I'm looking at in terms of Bitcoin. Now, Ethereum. Well, look at this. As I mentioned, we had a daily market structure break over here. Likely path was to head back to this interim support zone since all the bullish structure is broken. If you guys have watched my auction market theory lessons, you'd know value area high. We got above it, but as soon as you close back below it and fall back inside the range, you can look at your lower time frames and trade that short setup down. And this is exactly what I mentioned in the video yesterday. So guys, if you enjoy my content, you value content from a real trader, make sure you subscribe. Check out my description. You want to hit me up on Telegram. By all means, I'm here to help you guys. Let's make this place amazing, make this community amazing. You guys are awesome. Look at this, Ethereum. I mentioned this path, how we're likely to dip into one of these support zones due to the bearish setup. And that's exactly what has played out to the T here. Ethereum much weaker than Bitcoin now on the day, which is good to see for Bitcoin. This is actually a great sign because alts were taking over at the wrong time while Bitcoin was trying to break out. So to see Bitcoin having strength is good. Now you're just looking for, can we form the higher low at this interim support between 4.2 and 4.3K? Fail that, then your last support is at 4.1K, the high time frame SR. That's the absolute cannot lose level and would actually set up a really nice trade, as you guys know from the auction market theory lessons. You've got the value area low over here, much like we had the value area high over here. If you fall below it, but then reclaim it, again, that sets up a beautiful long where your stop loss gets managed and you can trade it back to the value area high. If not, some of these liquidity targets here. Get some really nice risk to reward there if that does play out. But not guaranteed. We may form a higher low here where you can then again look for your reversal setups. And from there, you're probably going to be looking at the liquidity if ETH is going to bottom out there. Otherwise, as I said, your risk of this chart breaking down below. So that's what I'll be looking at on either scenario. When we zoom in to the 4-hour, so as mentioned, you had an attempt to flip the resistance, but it failed, offering some decent short setups, but because the move was so violent, didn't offer great risk to reward. So I never took this setup since it's just a 1.19 hour trade back to the value area low. Stop loss really has to go at the highs there. So didn't offer the nicest move, but got a little bounce into this gap. Could barely fill it though, which really is a show of weakness on ETH. So definitely expecting lower, expecting price to hit this 4.2 to 4.3K zone. If not, go down to the high time for support resistance. And on the reclaim of that value area low, I'd look to trade it up if we do get that setup. That's always a really nice setup that I like to take when it comes to range trading. So that's what I'll be looking at in terms of Ethereum. So Solana, what are we seeing? We'll do a quick update here. Solana following the orange path. So again, you're just looking for it to build a higher low and not lose that yearly open. And get rid of this weekly open level now. You're just looking for price to consolidate, digest the move. We've rejected at the resistance, the level where sellers showed up. So sellers showed up again and are pushing price down now. So now we just need buyers to show up. It's that simple. Ideally, you want to see 200 round number hold on Solana. So again, it's not been interesting on Sol. It's been a slow moving chart since it had that really nice move a couple weeks ago. So from here, you just need to be patient. People are going to get bled out. If you can find your nice setups at the support, at that high risk reward area, around that 200 round number level, where we have found support previously, has been resistance previously, that's going to offer your best setups to look for some swing trades. If you see price start reversing, stop loss gets managed, and then you can look to trade it back up to the highs or wherever your target is. Of course, in validation of that is this green path. So breaking out, getting above this recent consolidation, which we've sold off from here, flip that, then you can look for highs immediately. Otherwise, looking at the orange path. So that's it for the crypto market. When we look at the general altcoin index, what are we seeing? Well, we're starting to close below this breakout level, which is the important level to hold and flip into support, because it's a previous level which led to a fake out. So reclaiming it should lead to bullish momentum higher. And if it doesn't, then again, you're looking for another higher low to form like this, where you just get deeper flushes on your altcoins. But as long as they form that higher low, over here, over here, over here, as you can see, it keeps leading to a bid up. So expect that to continue. You got these weekly 12 and 21 bands, which keep leading to a further bid, further bid, further bid. Remove all this, you can see those weekly bands. If we dip into them, you want to see that supported, and that can lead to a move higher. Of course, if you lose the bands, then that's actually bearish and probably sets up a lower high here and a local top. So keep an eye on that. You don't want to lose the bands, as that then leads to a potential downtrend and filling in some of these gaps over here. So that's what I'll be watching for on the total 3 markets, is everything excluding Bitcoin and Ethereum. Now, when we look at gold, so Top G, JC wanted me to take a look at gold, take a look at the setups now. On gold, you want to be trading low time frame here, I think, because every trader's seeing the same chart right now. You've got to ask yourself, why was you not interested in gold over here? And this is, of course, not personal to you. I'm just saying in general, a lot of traders, they're going to get super interested now that gold has gone parabolic up. What is this now from the breakout? It is up 16% on the biggest asset in the world, which is insane. So, this is when you start to get your leverage coming in, your tourists coming in, whereas on the breakout here, this is when smart money were in, and that's why smart money get the easy ride. They're rewarded. Whereas now, it's likely to going to get a lot harder, a lot more technical. So, what do we got? Daily 12 and 21 bands. These have been holding. This produced a new high on the retest. It was what I told you guys to look for after the breakout. So, that was the first setup. That tells you that if we dip into the daily 12 and 21 bands again, you want to look for that as support and to hold to new highs. And of course, you want to hold this daily market structure, the recent low, which led to the most recent high. That's for your swing trades. Now, if we look to some lower time frames, can we find any support bands? Well, yes, this 4-hour 12 and 21 EMA bands has been holding very nicely. It's had a dip currently. Now you want to see, does this dip lead to new highs? It has previously led to new highs. So since we broke from this mini consolidation over here, that started the next trend leg. Again, everything's fractal in the markets. What does this look like? That looks exactly like the daily setup that I showed you guys over here. It's just on the lower time frames. So smart money accumulated, built up energy here that led to the markup, and then the 4-hour bands were your respected trend support, as you can see over and over again. And even now we're dipping into them, so you want to see them hold. If they don't hold, then I believe the 12-hour bands have been super nice. So yes, as you can see, 12-hour bands actually have given you more signals than the daily. So mark these in blue, whereas the daily's just given you one buy. 12-hour bands have given you 1, 2, and of course 3 buys over here. And you could even call this one a buy, so 4. It's been respected over and over. So again, I'd expect these 12 and 21 12-hour bands to hold and continue to be respected on any dips. And that's, of course, if these 4-hour bands can't hold. So that's what I'd be looking at in terms of trend support. On the 1 hour, what are we seeing? Well, 1-hour bands aren't really being respected. They remain green, but we closed below them, closed above them. 4 hours much better for that. You can see they're going red, green. So not much overall respect, but you are seeing this H150 find some support. That is where the wicks are coming to time and time again, but again, not as clean as your 12 hours. So that's what you got to go through in trend trading. You've got to look at, what is my support bands? You can clearly see it's the 4-hour as your fast support. And if that fails, it then comes to the 12-hour. And of course, if that fails, then you've got your daily. But generally, the 12-hour bands have been respected, so expect that to continue. And once it stops being respected, I'd actually expect gold to enter a range here, which is going to be a classic because, as I said, people get excited. Now gold's up loads. They all want to trade gold all of a sudden, and they weren't present over here. So what can happen is gold then produces a lower high. 12-hour bands actually stop working. And that's when you see a range form and actually Bitcoin take over. So be wary of that. If you haven't been trading gold throughout this entire rally, you've got to ask yourself, why am I getting excited now? Is it because it's up so high? Or is it because I'm actually a gold trader? Of course, if you do trade gold, then by all means, keep trading your setups. Otherwise, you are, of course, getting closer to an area where this chart is going to go into consolidation. Now, I'm not saying it has to. This can be from much higher. Gold's got momentum. Don't get me wrong, guys. Look at this trend support here. Expect it to continue. I expect it to continue. It's only once this trend support is lost and I actually see these green bands not holding support anymore, actually flipping red, green, flipping red, green. That's when you're looking at this and saying gold's in a range, and probably when Bitcoin can actually have a breakout. That's what leads to Bitcoin having that markup that actually holds. So that's how I'd be trading gold. If you guys do want to trade gold, of course, when you look at Bitcoin against gold, what's been happening? So it's everything I talked about, seeing it rally down. So you don't want to see it lose the September low, or that's going to lead to more weakness on BTC. You want to see it get above this September high over here if it is going to outperform and have some strength. So watch this carefully. We're within the range. Don't want to see it break that low, or Bitcoin's probably going to go for a deeper flush. Break above here and Bitcoin can hold up strong. Now, silver's also been a big mover. Let's look at this chart. Look at this. 101, cause and effect. This is absolute textbook stuff. You consolidate for 1,365 days. So the people that buy the breakout, they deserve these gains on silver because they've held through all of the boring price action. And it's boring price action that leads to exciting price action. And it's exciting price action that then leads to boring price action as retail get too excited. So we are hitting the all-time high on silver, most likely today in the New York session. So going to be very interesting to see. Now that silver has hit its all-time high, it's almost the equivalent of Ethereum hitting its all-time high. Does this lead to metals cooling down, where you actually now start to see some volatility come in, and this consolidation again is going to lead to crypto being favored over the metals? Or do we see this actually just blast through all-time highs today, have no regard for the liquidity, and continue on higher? That's, of course, going to be bearish for crypto as metals are still getting the attention. So silver looks really strong, much like gold. Daily bands holding nicely. If you look at something like your 12-hour bands, they are holding even nicer. So you're getting even more setups on these 12-hour bands when it comes to silver. And these are offering really nice long trades. Whenever I trend trade metals, I always look at these bands as my entries once I've identified a trend. And of course, the trend's identified when you get a breakout of a nice consolidation like this. Boom, that's your trigger. That's how you don't get chopped up during this, trying to trend trade the bands. You just wait for the break of structure, the markup, and then you trade the bands. Then you do your trend falling steps. Because again, what is this? Back to earlier in my video, this is a range. This is mean reversion, whereas this is trend. So that is silver. Nice update there for you guys. Quickly look at stocks. What are we seeing? Well, continue on higher. It's the endless grind higher. So looks good. All the 12 and 21 bands are holding. Expect them to produce new highs, as I've been mentioning. If they fail, then you can look for some risk off move lower. And I think, again, that comes with some sort of AI overexcitement in some of those big headline investments that we've been seeing on the likes of AMD, on the likes of the NASDAQ. So this is actually pushing on higher. This is now getting to the stages where we're entering a parabolic move. It's just absolutely marked up. So The higher this goes, the better for the stock market, but it's leaving inefficiencies, which creates the potential for a risk off move later on. So definitely keeping an eye on all of these AI charts, which had a big deal recently. You shouldn't be shorting any big moves like that, which is why you get these huge markups, even if later on it's going to lead to a bleed, because shorts just get wiped out, and then the over leveraged bulls, overexcited bulls get wiped out. And that's how the markets really go. Nvidia just consolidating above this high. While it's above there, looks good for continuation higher. So AI looks decent. The reason I'm looking for risk off signals though is because the dollar keeps rising. It's broken out of this box. It's heading towards that range low, which it broke down from. So when you're seeing the dollar rise, you're seeing metals rise, you're looking at, okay, is there some sort of tension in the world? Is there some war escalations? Is there something economic that's breaking? This chart rises is going to lead to further risk off moves, especially in Bitcoin, which seems to be the leading indicator. We know it's the leading indicator of liquidity. So interesting to see Bitcoin's being a bit weak while the dollar rallies. So watch to see if it reverses at this range low at 99.578. That then will lead to your risk on moves. Or if it breaks out and has to go to 101, that's going to lead to a further risk off move before a reversal maybe later on. So that's what I'm looking at in terms of the dollar. Quick mention of BNB before I wrap up. So as you guys know, took a nice long trade on BNB, got out of that a while back. So if we take a look here, I got long. It was actually on the 1 hour time frame where we hit the H150 EMA, which I mentioned was the EMA to look for support at since we lost the 12 and 21 bands. Reclaim the 12 and 21, that was the trigger. I exited early because I saw Bitcoin breaking the low, and that was a nice 4.66 hour trade. And yeah, since then it's been ranging. Very simple, because you got this wick, which is now exhaustion. It's now distribution. You're seeing every time we head into that wick, sellers show up because that's where sellers were willing to sell. Therefore, that's halting price right now and potentially could even lead to the trend shift if we do start to break these lows. But as long as we hold the lows, you can expect continuation on BNB, and this is just going to be a range. The more we accept in the red zone, the better prospects there are for continuation higher. So that's it for BNB. Good trade there. Took profit on that one. No interest now unless we can accept in this distribution zone. Otherwise, it looks like it's starting to fall over. Sellers are showing up here. And if we lose this low over here, I'd actually be looking for a further breakdown on this chart. We can then start to look at maybe some of your higher time frame levels to see, can we find that higher time frame support? So that would be your daily 12 and 21 bands. Otherwise, not much interest. This is your new market structure level now on the daily, 1151. Don't want to lose that. Otherwise, that's the daily trend also invalidated. That's the full market update. So enjoyed it. Drop a like, drop a comment, drop a subscribe. I'll see you guys in the next one.